Earlier, I talked about some of the characteristics we look for in companies, and within the payment space, we find a lot of attractive companies, whether it's competitive advantages they have, enduring competitive advantages, dominant market share. We talk about being able to generate free cash flow, having recurring revenue, being able to generate revenue per swipe of a card in payments, and then having great cash-rich balance sheets that management teams can go ahead and allocate capital properly, whether it's a dividend, whether it's buying back their own stock, buying other companies, or organically growing. Pricing power. But one of the issues I wanted to talk about now is scale, and having an infrastructure in place, a platform in place to be able to handle that scale. So Nielsen does payment estimates. They're the go-to player for estimates and forecasts for the payment industry. And they estimate in 2014, there were just shy of 200 billion card transactions globally. And from 2014 to 2024, over that decade, they're looking for growth to be in the low double-digit range. So compound annual growth rate, low double digits, and 2024 to have 515 billion transactions. And just for a moment to put 515 billion transactions in perspective, that's 1.4 billion transactions a day. That's over 55 million transactions an hour. And while I've been doing this at 16,000 transactions a second, while I've been doing this quick presentation, you're talking about 5 million transactions. And so if you can go ahead, this is the ultimate business, the payment industry, of picking up pennies in front of a bulldozer. If you are picking up millions of transactions and millions of pennies, in the case of the payment economics, it's not pennies, it's dimes and nickels and quarters that you're able to pick up in front of that bulldozer, we think that there's great growth opportunities going ahead.